before I get into that, you said something which was interesting. We've had all this inflation and it's led to growth, but I want to counterpoint. I want to counterpoint you on that, because inflation is a problem. It's not a solution, right? So when they say, oh yeah, look, we've had 2, 3, 4% inflation, they refer to it sort of like as like a growth metric. Like, when inflation gets too high, the economy's too hot, is almost what their argument is. But that's actually like the opposite of how the true free market works. If the price of an item goes up, does that create more demand or less demand?
No, the price goes up, should be less demand, right?
Yes, absolutely. Yeah. So when the price goes up, demand goes down. Okay, well, a strong economy, does it have less demand or more demand?
Strong economy should have more demand.
Correct. Yeah. So really, in a strong, healthy economy, prices are actually coming down so that there can be more demand. But the reason that prices come down, so some of you might be like, well, hold on 1 second, how's that work? Here's why. Because what happens at first is that the increased demand raises the price, but that price is raising based off of the demand. It's not raising based off of the inflation. Remember, inflation passes through as a higher cost. Economic demand does not increase the cost for the producer. So when inflation takes place, the cost of production for the producer increases, which forces the market price higher. And if the producer doesn't move the market price higher, then their profit margin shrinks. So inflation forces prices higher through higher costs of production, which then have to get passed to the consumer, or else there's going to be less profitability. Economic demand pushes prices higher, but it does not push costs higher. Cost stays the same and price goes up because of the increased demand. When the price is higher and cost stays the same, profitability increases, right? So with inflation, producer profitability stays the same or decreases.
Or decreases even, yes.
With a strong, healthy economy, profitability increases. And then the producers can take that profit and reinvest it in expanding supply. And it's called marginal cost of production. In other words, it costs way less to make 10 million water bottles than it would cost to make 1 million water bottles per water bottle. The point is that the producer becomes more profitable and then can reinvest in expanding supply, reducing their marginal cost of production. Now they're selling more units with an even lower cost, creating more profit, even though the price is lower, because now they can lower, when their cost of production goes from 10 cents to 7 cents, they can lower the price of the water bottle. And when they lower the price of the water bottle, that increases the demand. So they don't care about the lower front end price because their profitability margins remain the same, but now they're selling more units, and more units means more profit. So that's the definition of a healthy economy. When you talk about we've had inflation and inflation has produced growth, no, it hasn't. Profitability has not increased. This inflationary growth does not produce profit. Sure, it makes the number on the screen go up. It makes the nominal number go up, but real wealth, real growth is not taking place. Inflation is a fake growth that does not produce any profitability. And in fact, when they lie about the rate of inflation and the rate of inflation is higher than the rate of growth, real growth is negative. And if you look at govflation.com, real growth is negative. That's just a matter of the mathematics without changing methodology, keeping the methodology the same and consistent without making tweaks to it. Real growth is negative because when you use a GDP deflator that reflects real inflation, which is 11% and not 3%, then the growth of the economy is negative, and all of this stuff starts to make sense. It's only when you tweak those numbers and pay attention to the government that things start to get confusing. So those who put forth that inflation is growth do not understand how inflation works and do not understand how a true free market generates growth through temporarily increasing prices, but allowing producers to increase their supply, lower marginal cost of production, lower prices, and then include more participants in the economy, increased demand. So what do we see? Increased production and increased consumption. That's the definition of economic growth. With inflation, look at the sales numbers that the USA just reported. It's very clear. Americans are buying less and paying more. That means more stuff is not being produced and less stuff is being consumed. Lower production and lower consumption is the definition of a declining economy. So this is
Right,
this is
right.
this is the problem. That is the you hit the nail on the head with the counter argument that some people would put forth with that, because it's just not true, and the numbers and the evidence are all pointing that we are in an inflationary recession right now, and if we keep making the wrong decisions, we'll end up in a hyperinflationary depression.